Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the mysterious world of corporate finance, and sometimes, just sometimes, we find a real humdinger of a financial maneuver that will make your head spin faster than a hamster on a wheel. So buckle up, because today we are diving into Commercial Metals Company recent filing to see what kind of deal they've been cooking up. Before we get into all the juicy details, if you are someone who likes their corporate finance served straight up with no chaser, make sure you hit that subscribe button. And hey, we've built an awesome community over on Discord where we break down these filings even further. You can find the link in the description below. So what is this all about then? Commercial Metals Company, or CMC as they are known, has just dropped a report detailing a pretty significant financial move. They have completed a private placement, which is basically a way for them to raise a boatload of money without having to go through the whole song and dance of a public offering. Think of it like a special deal offered only to a select group of big-time investors. Now the big news here is the amount of money they pulled in. We are talking about $1 billion in what they are calling 5.75% senior notes due 2033, and another $1 billion in 6.00% senior notes due 2035. In total, that is a massive $2 billion they have raised. This is not chump change, folks. This is serious financing. They did this through what is called a private placement. This means they sold these notes to investors considered to be qualified institutional buyers or certain non-US persons. Basically, these are the big players in the investment world who are deemed sophisticated enough to make these kinds of deals. The banks BofA Securities and Citigroup Global Markets were the main facilitators here. So what is the plan for all this cash? The company says they're going to use this money to buy another company. Specifically, they are acquiring Foley Products Company LLC. This suggests an expansion strategy, buying up competitors or companies that fit within their business. This is a classic move to grow and potentially gain market share. Now, here is a little twist. All the money they raised for this acquisition is currently sitting in a special account, an escrow account. It is like a holding pen for the cash. It will only be released once the Foley acquisition is officially completed. This is a safeguard to make sure the deal goes through as planned. And here is the interesting part for investors. If for some reason the Foley acquisition doesn't happen by the 15th of October 2026, or if the deal gets called off before then, Commercial Metals Company will have to buy back all these notes. They will have to pay back the investors their original investment plus any interest that is built up. This is a pretty strong guarantee for the note holders. It shows the company is confident in closing the deal, but also provides a safety net for those who lent them the money. Let's break down these notes a little further. You have the 2033 notes, which will mature in November of 2033. They carry a 5.75% interest rate, and interest payments are made twice a year in May and November. These are senior unsecured obligations, meaning they are not backed by any specific assets of the company, which makes them a bit riskier for the lenders, but they get a decent interest rate for that risk. They have the option to pay back these notes early before they are due, specifically before November 2028. But if they do, they have to pay back the full amount plus a premium and any interest that is owed. This is often done if the company can refinance at a lower rate or if they just have excess cash. Then you have the 2035 notes. These mature later in December of 2035 and have a slightly higher interest rate of 6.00%. Interest on these is paid in June and December. Like the 2033 notes, these are also senior unsecured obligations. Similarly, they can redeem these 2035 notes early, but the window for that starts a bit later, before December 2030. Again, if they redeem early, they pay a premium. Now, for something that applies to both sets of notes, if there is a change of control event at the company, meaning a major shift in ownership or management, the holders of these notes have the right to demand that Commercial Metals Company buy them back. And get this, they have to buy them back at 101% of their principal amount. That means investors get their original money back plus a 1% bonus. This is another layer of protection for the investors, ensuring they aren't left in a lurch if the company's fundamental structure changes dramatically. The agreement also spells out what happens if things go really wrong. Standard stuff like not paying back the debt, breaking the rules of the agreement, or if the company goes bankrupt. In these cases, the trustee or a large group of note holders can demand immediate repayment of all the outstanding notes. This is pretty standard in debt agreements. It is the lender's ultimate recourse. To round things off, they also put out a press release on the 26th of November 2025 announcing the successful closing of the offering. This is where they would have shared this news publicly, confirming they've got the cash and are moving forward with their plans. So what is my take on all of this? Commercial Metals Company is clearly in an expansionary mode. Raising $2 billion to acquire another company shows ambition and confidence in their growth strategy. The acquisition of Foley Products could be a smart move to diversify their operations or strengthen their core business. The fact that the funds are in escrow until the acquisition is complete is a sign of good financial management and risk mitigation. However, the company is taking on a substantial amount of debt with these senior notes. While the interest rates are not exorbitant, $2 billion is a significant financial obligation. The company needs to ensure that the acquired business generates enough returns to service this debt comfortably. The change of control provision, where they have to buy back notes at a premium, also adds a potential cost if their ownership structure changes. Overall, Commercial Metals Company appears to be making a bold play for growth. The success of this strategy will hinge on the integration and performance of the acquired Foley Products Company and their ability to manage their increased debt load effectively. It is a strategy that carries both opportunity and risk, and investors will be watching closely to see if they can deliver on their expansionary promises. Alright, that is our breakdown of Commercial Metals Company's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this acquisition is a smart move or a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps the channel grow, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord server linked in the description for more in-depth discussions. Thanks for watching, and we will see you next time on Corporate Decoder.